Time now for a look at the day's business news. For that, I'm joined by Yuka Roya here in the studio, and we're starting with Renault announcing dismal results for 2020.
Well, a global downturn caused by the coronavirus pandemic has pushed the French carmaker deep into the red. Renault lost 8 billion euros last year as car sales slumped around the world. Although it faces more uncertainty this year, the company says that it does not need further financial support from the French state as it pushes ahead with an ambitious turnaround plan. Camille Nedelec reports.
Like much of the economy, 2020 put the brakes on Renault. Its end-of-year results saw it post a record net loss of over 8 billion euros last year. In 2019, it made a profit of 19 million euros. Renault's Japanese partner Nissan accounted for 4.9 billion euros of the loss. Group revenues were down by almost a quarter and car sales by 21%. Warning that 2021 could still be a bumpy ride, CEO Luca De Meo says he is convinced that the worst is behind them.
After a first half impacted by COVID-19, the group has significantly turned around its performance in the second half. This result is the fruit of all employees' efforts, the successful acceleration on our fixed cost cutting plan and pricing policy improvement.
The group has already achieved 60% of a planned 2 billion euros in savings. It comes after it announced last May it was cutting some 15,000 jobs over the next 3 years. In January, the auto giant launched its new strategy focusing on electric and high-end cars and expanding into technology and services such as ride-sharing.
We will turn Renault into a tech brand, into a service brand, into an energy brand. We'll have the assets to push the entire French automotive ecosystem on the higher end of the value chain.
The carmaker hopes to bring the group's operating margin to above 3% and to have 3 billion euros in available cash by 2023.
Turning next to a landmark legal case in the United Kingdom. The country's highest court has said that Uber drivers should be classed as workers under UK law and not self-employed, and should be entitled to benefits such as a minimum wage and paid holidays. The Supreme Court's 7 judges unanimously rejected the ride-hailing firm's appeal against a lower court's ruling, handing a defeat to the company in a long-running legal battle. Uber says it respects the ruling, adding that it only applies to a small number of drivers who used the app back in 2016 and that changes have been made to its business since then. The company has over 65,000 active drivers in the United Kingdom. Let's hear from one Supreme Court judge giving a summary of that ruling a little earlier on.
Drivers are in a position of subordination and dependency in relation to Uber, such that they have little or no ability to improve their economic position through professional or entrepreneurial skill. In practice, the only way in which they can increase their earnings is by working longer hours while constantly meeting Uber's measures of performance. For these and other reasons set out much more fully in the judgment, the Employment Tribunal was right to find that Uber drivers are workers who therefore qualify for the rights conferred on workers by employment legislation.
Well, with that, let's check in on the day's trading action. European shares are mostly up at midday. London's FTSE, though, has just fallen below the flat line as the British pound rose above the $1.40 mark, the highest level in almost 3 years. The CEO of Robinhood, a Reddit influencer, and Wall Street hedge fund managers faced a grilling from US lawmakers over the recent frenzy around GameStop. The House Financial Services Committee asked 6 key witnesses about whether last month's extreme volatility in the shares of the struggling retailer exposed questionable market practices and potential conflicts of interest.
In the wake of GameStop's stratospheric rise and fall on the stock market, US lawmakers want to know whether there was any foul play. In January, a popular trading platform, Robinhood, used by everyday investors, placed limits on trading after GameStop shares skyrocketed almost 2,000% in 2 weeks. Investors on Reddit had bought shares en masse, driving GameStop stock upwards and hurting hedge funds who had bet on the company dropping in value. Lawmakers worry that Robinhood had collaborated with those institutions to halt trading, something the CEO denies. They fear a conflict of interest as some hedge funds had indirectly invested in the app.
Robinhood Securities put the restrictions in place in an effort to meet increased regulatory deposit requirements, not to help hedge funds. We don't answer to hedge funds.
After the restrictions came in, the share price fell, resulting in Robinhood's customers losing money, but capping the losses of hedge funds. Also questioned was a prominent Reddit user who denied manipulating the markets.
Social media platforms like Reddit, YouTube, and Twitter are leveling the playing field. The idea that I use social media to promote GameStop stock to unwitting investors and influence the market is preposterous.
Many other Redditors have celebrated the ability of individual investors to band together to inflict massive losses on hedge funds, a potentially game-changing newfound power.
The COVID-19 pandemic has forced tens of thousands of restaurants to shut down in many parts of the world. In the United States, the unprecedented spate of closures has led to a boom in the auction industry as many owners put their used kitchen equipment up for sale before their next rent payment is due. One auction house says it made more money in August last year than at any other time since the company was founded back in 1959. But it says it's sad to see the scale of damage inflicted on the US restaurant sector by lockdowns and restrictions.
It's a bittersweet thing for me, is as I see these businesses closing, and it's sad, right? It's sad for me. But for us, it's been actually a record year.
We've lost 110,000 restaurants in 2020. That is 17% of our nation's total. We've never seen that kind of loss, not during any recessions, not during any other incident. So this is as dire a situation for the restaurant industry in this country as we've ever seen.
That's the situation in the United States, but of course here in France as well, restaurants are still shut across the nation.
It is an extraordinary figure. 110,000 restaurants have closed down since the beginning of the pandemic. Amazing. Thank you. And that's Yuka Roya with the day's wrap of the business news. That's it for this edition. I'll be back after a short break. Do stay with us here on France 24.